Good morning. Ira Epstein of Linn Associates with your Tuesday morning flash update. And this is for April 23rd, 2019, just after 9:15 a.m. Central Daylight Time. Now, keep in the back of your mind, this is a big time week in earnings. You're going to see many companies reporting, some good, some bad. We'll see what goes on through it. I think that what the market's looking for is for this period to be okay, second and third quarters to be a little bit slower, and then resumption in the fourth quarter. That seems to be the talk. But as of this time, this market's getting close to all-time highs. It continues for those of you that watch my afternoon updates with the embedded slow stochastic readings, which stays bullish. Metal markets getting hit today, as well as the silver market, the copper market. They're coming down as the dollar, which has been the bad bet of many traders this year. I keep reading reports the dollar's going to be weak. We're already almost into half the year gone. I know it's about a third through April, but you do understand we're at April 23rd. And the dollar, if anything, is knocking on the door of contract highs. So not quite seeing that. Most of the other currencies against it in the red, as you can see today. Interest rate futures getting a little correction because they've been climbing steadily. And while we're up in the metal market, I find it interesting that the WTI crude is gaining today on the Brent. Pretty interesting part there. As for the natural gas, nothing in this other complex seems to save it. There's just too much of it, and it's that funny time of year when you don't need a lot of natural gas as the weather's just getting into the mild category. Soybeans under further selling pressure along with corn. Wheat, of course, a little bit different. And look at even cotton coming down at this point. Now, the day's news. The Richmond Fed came out. And I don't consider these positive numbers in any manner. But the market's not looking at this. The market's looking at earnings right now. And as you can see, the manufacturing index up 3. They expected up 10. Shipments down 2. They expected that, well, the prior was up 2. New orders index, look at the big difference, a -2 to a +9. All of these numbers, with the exception of prices paid, not that good. Now, in the new home sales, this was, I think, a surprise to the market. They saw the new home sales up 4.5% to 692,000 annualized pace. They expected it down 2.5%. It's a monstrous swing, 7% swing, and they were looking for 650,000 units. The supply of homes down to 6 months from 6.1. New home sales price, this is the key. It's dropped nearly 10% from a year ago. Now, if you look at Realtor.com, it said in its initial 2019 forecast that it expected the 30-year mortgage to be running about 5.5% in 2019. They've since lowered that just now to 4.5%. So it's a combination of lower interest rates, prices falling for homes that are starting to move it. Redbook sales, sort of mixed on the retail sales. The weekly retail sales were up 1.2% in the first 2 weeks of April, 5.5% for the first 2 weeks of April versus 2018, and up 6% versus this time frame a year ago. But then you come down to the ISC weekly sales, and this is why I say sort of mixed. They're down 1.4% from the previous week, while the retail sales from a year ago were up 1.4%. Eurozone data. What's happening here as you look at the screen is, simply put, their debt to their GDP keeps falling. Part of that has to be that people aren't borrowing. The market is in a funk there. They're still dealing with Brexit. They're dealing with slow economies, and that's what that's saying. The Bank of Canada, well, it meets this week, and it's expected to not only say it's going to hold interest rates steady, but like the U.S., put out something in the neighborhood that it might hold rates steady through the end of the year. You know, a popular indicator, one that people don't know as much about as they might should, is called the Arun indicator. And let me just give you the nutshell of what this indicator does. It tells you, by looking at previous data, current data, is the market making higher highs, higher lows, and if so, is that keeping a trend intact? I'm giving you the secret as to what this indicator does. There's different ways to apply it on the chart, but they all work the same way. The idea is bull markets keep making higher highs, bear markets keep making lower lows. You measure the time between the two, and the indicator does it for you to tell you if the market's staying within a trend. I've put together a video series on this, so if you'd like to have free access to it, it's yours. You can either call my staff, they'll get it to you by email, or you can go to our website, go under our free offerings, our carousel of free offerings, choose this one, we'll put it right in the email for you, or you can click up here to get to that page of the free offerings if you're watching me on YouTube, and it'll get you there. I'm Ira Epstein. Look forward to seeing you at the end of the day with our end of the day videos. Good luck, good trading today.